I'm Brian Birch. I'm here to talk about IFRS 17. I've done some videos about IFRS 17, but this one is about a particular company that I have in mind. I won't mention the name, but it has some business that requires some extra challenges, and I'm not going to solve all of those, but it helps me think about the fact that there are particular examples that we need to think fully about for IFRS 17. So we'll look at the project and the technical aspects of this. And uh, my overall message is let's talk through IFRS 17. Let's plan it and let's make sure the right people use the right skills. We put the right effort in at the right time. Now, overall on IFRS 17, there are new reporting requirements and there are no new processing requirements. We need to take particular types of data about insurance contracts and take groups of those that are managed together, group them in yearly groups or if you like, less than yearly groups, and mark off if they're expected to be profitable or onerous. And those particular ways of taking the data and processing it through and particular things to be reported means that there are different challenges and potentially important and difficult challenges for some companies. There are three different types of models, roughly an easy one, a main one, and a one for investments. Although the easy one isn't all that easy, there's still plenty to be done on that. But there are three broad models, roughly based on the type of products and their nature and the duration for insurance. Now, most companies will need software to buy software. Some will have built software already, and is an awful lot of data to be processed in very particular ways. So I would not expect anybody to be doing this on Excel, but there are a variety of solutions, some big, some small. It matters whether you are taking on insurance, whether you have reinsurance, you're getting rid of the risk, whether you're taking on the risk as a reinsurer, and the various types of business that it is, how you take on risks. You need to put those in particular boxes essentially for accounting and report on those. There are particular balances, particular accounts to be able to track the liabilities, the money that the insurance company owes to policyholders, where to keep it, when to release that money to say it's due, how to cope with the various actual cash flows involved. So many things need to be tracked as part of IFRS 17. Key differences and key things to be looked at is the profitability. The ways of measuring profitability under IFRS 17 will change. The ways of storing accounting liabilities and money we set aside for future payments, it changes. The measures of how an insurance company will consider itself to be successful can change. So they need to be looked at, and how an insurance company needs to communicate with investors can change as well. Whether or not you still release the same dividends, whether or not you show the same profit, these things can change, and they're very important numbers for the company and the investor community. Let's look more specifically at project issues. We need to look at the time, the scope, the quality, and the cost of doing all these things, and this huge interaction between many aspects of IFRS 17. And for me, therefore, I think it's very important that the project manager knows some of the accounting and actuarial details that are there. And you can look at that the other way. The accountants and actuaries need to know something about the project management so that the right things can be done and the right budget and time is set aside for those. And if there isn't enough time, then perhaps getting other people in to help, finding ways of accelerating it. But often that will mean either compromising a bit on quality, and there's only so much you can do on that, or getting extra people in and spending more. Implementation of IFRS 17 has been delayed until 2022, so for many people it'll be the end of 2022 and 2023 before their reports are released. However, that essentially means this year to start or finish the project, and ideally it would be next year to run through a finished set of software and processes that you then know by the end of the year if that will work. If you don't leave next year to do that, then you're using less and less time. You haven't done 4 quarters. You haven't done a year end with everything in place in the new world. That itself has certain risks, and if that's not possible, then we're managing already the risk of what can happen and how do we cope with that risk. When do we need things to be ready, or are we just running on the seat of our pants? By the seat of our pants in 2023, and hopefully it will all work out. I certainly don't recommend that. So getting the right things in place is amazing. So if you're a company and you're relatively early in this IFRS 17 journey, our questions include: do you have a steering committee? Have you hired a project manager? Do you have the main technical people in place? Do you have a budget? Have you hired the main team? There are warning bells going off for IFRS 17 already in my head as well. IR35 is essentially a tax relating to contractors. Have you as a company sorted out what you're going to do? Are you offering new contracts to contractors, and are you clear on where you fit within IR35? Alternatively, do you have external consultants? Do you know who you want, and do they have the right people that you need? Do you need software implementators? Do you need actors? Do you need accountants, data people? There's different sets of people you may need. Have you evaluated software? That could take several months. Have you checked your data? Do you need to improve your data? Each of these steps can take several months, and therefore, how many of these will you get done this year? How much will get into next year? And then when will you get the final situation that you can run, that the accountants and actuaries can run with, and therefore produce real live results, ideally in parallel for, ideally a year. Have you written the reports that you will need? There are particular outputs and accounting lines that you need under IFRS 17. They should also align to the other reporting that you're doing, so you need to understand that. Management can and should ask questions about how these things relate, and are they right, and you should expect investors to need to understand the new versus the old, and have many questions around that. Indeed, when you get it all live, do you need to improve it? Are there things that you really want to do, rather than the first draft of the project? Right, the budget. You may well be spending a lot of money on software, on getting the data right, changing your IT environment, changing your accounting or actuarial environment or software. There can be ongoing or once-off costs. There can be supporting services, investor communications, HR. Remuneration may change. Your dividends and your profitability can change. So does that have an effect on some people? The project requirements, there are the main requirements. There are also licensing and sanctions and financial crime and other regulatory things that need to be, you need to keep in line with those. While IFRS 17 is international, it's worth checking out country by country. Are there any variations or timing or other issues that one needs to be aware of and bring into the project scope? And there are a lot of surprise complications. I'm not thinking of regulatory things there, but there are some changes to the standard. But there are, if you realize you use a particular type of product, that could actually change the type of accounting model that you use, and therefore the type of software you use. So big chunks of the project can be affected by what products and certain things. And if you know enough about IFRS 17, you can anticipate quite a few of these going forward. But if you don't, then there may be so many surprises that it becomes very difficult to manage the project overall. Deliverables and outcomes, you need to have reports, you need to have a viable data. That's the ultimate thing. You need to be able to give something to external stakeholders and the auditors. But practically, you need a data model and an environment and software to be able to use that. The personnel, the staff for the project and also ongoing need to be appropriately skilled. You need to legally, they need to be either employees or in place for the right length of time for the ongoing world. There needs to be the right data and explanations for auditors. There will be many questions of these new results. Are they right? How do you know? Where do they come from? What does it mean? What's profitability? Is our business viable and good? What are problems with our business? There are all sorts of required answers and also sensible performance related answers. And as part of that, there's an internal talking to the management, how to run your company better, and there's also investors, how has your company done. Some of these things could be dealt with later on, but it's good to know that you're at least going to be coming to them and potentially collect data along the way to make sure you can answer those questions. There are lots of interdependencies and dependencies of all sorts of different parts of things. The environment, the team, the auditors, the processes. A change in one thing can have a knock-on effect of what data needs to be collected, how it needs to be processed, what software do you need, and aspects like that. There will be various workshops such as those to simply explain what IFRS 17 is, to explain the project, to explain the design of where the data and processes and software, how they will fit together, and potentially at some point a prototype process, ongoing accounting guidelines, if you like, of how you expect the new world to work. Project documentation, you will at various times need to talk about the issues, the activities, the priorities, and the scheduling, all sorts of things like that. There's a communications plan, who needs to know what and when, again explaining a particular aspect of the impact, the issues, etc. on that. There are chunks of activities on IFRS 17, those around data, those around the ongoing process, those around reporting. Getting those right, understanding what's needed, can in itself be quite a big chunk of work. So you probably need the right people to be free enough to delve into those and connect those overall as part of a project. Right, stakeholders, thinking about more the people here. There's the communication